Doo-doo-doo, doo-doo-doo. What's going on with the FASB and the AICPA? This is the Issues Watch podcast. Hello, welcome to Issues Watch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm a partner in charge of accounting and auditing at Sobel & Company. So every 2 weeks, we like to come up with some A&A items for you. I like to give my quick disclaimer that these views and statements expressed herein are my own and not necessarily those of Sobel & Company or the New Jersey Society of CPAs. So what is going on at the FASB and the AICPA? And I will tell you, not much. It's the summer still. So while everybody's relaxing, the AICPA and the FASB are being a little bit calm. You'll hear later on in other that there's nothing going on. In other, PCOB hasn't come out with much news. So that's kind of a jump ahead a little bit. But there has been a couple of things that went on I like to bring to your attention. And that's what we try. Our goal is in these bi-weekly sessions is to give you some updated information on A&A, accounting and auditing, assurance services, however you want to describe it, topics, so that you can feel up to date on the information. So most recently, the FASB provided endorsement for the PCC's recommendation of practical expedient treatment for share-based payments to employees and non-employees for fiscal years beginning after December 15th, 2021. What does that all mean? So let's first start with PCC. So I asked the man on the street, did a full survey of who PCC is. Man on the street, do you know who PCC is? Is that a third-party practice aid? Nope. Very similar initials, but it's not. The third part, PCC, is a private company counsel. And in their definition on the FASB website, the PCC is a primary advisory body to the FASB on private company matters. That's the important thing. For years, everybody has been clamoring big gap, little gap, big gap, little gap. And they said, we will never come out with big gap, little gap, never, ever come out with big gap, little gap. And lo and behold, back in around 2013, a lot of people don't know they came out that long ago, but back in 2013, the Private Company Council came out where they advocate for issues as it relates to accounting matters for private companies. Now, you can define a private company in different ways, privately held. I deal with broker dealers that are privately held, but because they file their reports with the SEC, they're deemed a public entity. So you have to be very careful on what is a private company versus a public entity, et cetera. But there is a body out there that advocates in some way and reviews, advocate might be a tough word, but reviews content and material and the impact on private companies and what's important to the private companies. So again, I recommend that you look it up. The PCC uses a private company decision-making framework to advise the FASB. The PCC also advises the FASB on possible alternatives within GAAP to address the needs for users of private company financial. So I want everybody to know what the PCC is, because in the accounting people out there that like talking about this stuff, especially at the NJCPA A&A resource group, there's a report given at each meeting. So know that there is a body out there, and I recommend that you look up information about them. Okay. That's it about the FASB. You know, there's pronouncements that are coming out, pronouncements that are becoming effective. You should always keep on top of that. And I, of course, will try and bring them up at each session that we talk about. So the AICPA issued, and they issued a couple months ago, so it's not new, but you'll find out why I'm talking about it so much now. But they issued a proposed statement on quality management standards. So years ago, we had SQUASH, System of Quality Control Standards. Now they're coming out with SQUEAMS. I don't know, Squidward from SpongeBob. I don't know. Systems of Quality Control, Quality Management Standards. Okay, whatever. And statements of quality control standards, that's what it is. And it's going to be reviewing and adjusting and changing the quality management, not quality control, quality management systems within pretty much more or less the firm. So those that are in industry, this may not affect you as much. And those that are doing compilations, that still goes under SQUASH, System of Quality Control Standards. But the audits and reviews, they propose this standard And the reason why I'm bringing it up and talking about it, especially so much a proposed standard, is for two reasons. One, it's going to create a significant change as it relates to firms. First, you have to document your risk assessment process for accepting clients, for assigning clients, audit review clients to different partners in the office, for evaluating the quality management within your firm. And yes, if you notice, I keep referring not to quality control, but quality management. They've gone now from being an EQCR to be the EQR, which we'll talk about next. But it really focuses on the quality, the review, and the quality management within the firm. And it's going to require a lot of documentation. And what I fear, because I've read through the proposal, a lot of firms are not going to get it right. They're going to have it tough. And there will be that third-party practice aid that will help out. But I've seen people just fill out that third-party practice aid by rote. And it's going to be an arduous task. But the second part of it is an engagement quality review. Now, a lot of the smaller firms and a lot of people have heard me speak at sessions, particularly as it relates to independence threats and self-review and familiarity. And I always say, try and have another firm review your information. And this focuses on have quality review requirements, EQR, engagement quality review. When should it happen? Who should be doing it? Can a quality reviewer rotate? When a partner go from being an engagement partner to being a quality reviewer, almost like a PCOB type of mindset. They're trying to converge and align a little bit with the international auditing standards. And I know we're not international, but AICPA, to their credit, they're putting up a fight on certain issues. They're trying to properly compromise on other areas. So why am I going over this so much? Because I recommend that you read into it a little bit, read the exposure draft, but there's also a comment period that closes at the end of this month. And if you have a passion and a real feel for this, you might want to comment on this. I know the New Jersey Society of CPA, the ANA resource group, they will be posting a response letter. I'm part of it. We're part of another network of firms. They're posting a comment letter. If you or your firm feels you should post a comment letter, I strongly recommend it, because this will require significant change, especially to some of the smaller and medium-sized firms. Please look into this. Don't let this one slip by. And then when it gets adopted, you're going to be saying, how did I not know? It's there. Next thing I want to bring up that the AICPA came out with, they came up with a technical question and answer, non-authoritative. It's technical question and answer for guidance on shuttered venue and restaurant revitalization funds. Now, why is this important? Because remember when PPP came out and the AICPA had information relating to how to account for the PPP. This similarly provides information relating for nonprofits for shuttered venue, shuttered venue issues, and for for-profit entities for restaurant revitalization funds. So if you or your organization receive them, I strongly recommend that you look into this technical Q&A to provide some guidance, or reach out to somebody that can help you. And the last item that I will bring up is I saw that AICPA put out a resource. It's called Bitcoin Basics for Nonprofits Accepting and Valuing Crypto Assets and Gifts. So I started going through it, and it's actually an older article that they came out with. I mean, they referenced 2018 in the article, with Silicon Valley. But I strongly recommend that you start looking at this, and don't be surprised if I bring it up again, because crypto seems to be a big topic right now. Again, at the ANA resource group, they slotted 15 minutes at the end of one of the meetings just to talk about crypto assets, because we've got to get our hands around this. We know that the IRS, I know Howard Bookbinder, this is not a tax session, but the IRS just came out with, Congress just came out with crypto assets and what broker dealers have to do for certain tax reporting. And I'm sure I cited that wrong, and Howard's going to probably contact me and said, he'll quote Circular 230 and everything else. So love Howard, you're a great guy, especially everything you do for the society. So those are our topics for today. I want to thank you for listening in and watching. And just bring up some closing comments. I'd like to put a plug in for the upcoming NJCPA webinar, 2021 Single Audits, new triggers resulting from COVID funding. If you'll be conducting single audits, or you think you may have a single audit, I strongly recommend that you attend this session and hone up on your skills. I'll be monitoring this session with two of my Sobel colleagues who will be the speakers. A live broadcast will be on, when this is released on August 24th at 11 a.m., but there'll also be a live replay on August 26th at 11 a.m. Register at njcpa.org/events. And remember, NJCPA members that are involved in A&A should join the A&A Resource Standards Group. Go to njcpa.org/groups to sign up. Thanks for joining us. We'll be back with a new A&A episode in 2 weeks. You can access all IssueWatch podcasts at njcpa.org/IssuesWatch. That's all I have. But how many times are you guys going to make me say NJCPA and not make me say the S?